Hi guys, Brian here from PointLabs.net. Just wanted to go over of a story that was just posted on this Indian Express algorithmic trading case. IT department swoops on former NSE bosses and brokers. So their Securities and Exchange Board of India investigated these NSE algo trading that were run by brokers irregularities in the algorithmic trading case. An official's wife, IT sources said, in Mumbai, provided technology to a stockbroking firm for unfair access. The question becomes, why are these HFT firms getting busted all the time? A lot of it has to do with greed, obviously, and a lot of it is driven because these developers have ways to go about it. For instance, there's retail brokers that will resell your trading flow back to HFT firms, take a cut in that order flow, and then resell it back to the broker. So quite a few retail brokers do this. I'm not going to mention any, just again, due to lawyers and whatnot. But I can tell you that why a lot of people are on Interactive Brokers is because they claim that they don't do that. They even have ads that you may have seen that educate people on that. A lot of brokers do that because it's just an extra cash flow for them. It is obviously a corrupt practice. It's like going to, I don't know, a car dealership or a car machine shop or an auto body shop, order the parts and you realize they're not the brand name product that you're ordering and putting in your car, but they're not declaring it that it's actually potentially aftermarket, subpar quality parts. So it's the same idea here. It's just immoral. So we need to be really careful on when we trade. There is basically the DMA, the direct market access, but in order to get onto exchanges or spot markets, you have to have a large account, $250,000 probably, maybe even $500,000. So that's going to take that out. So if you're building up your trading account, and to prevent this, as I said, is to trade through a big broker for retail traders like Interactive Brokers. Just something to be aware of. But I just don't think, I'd hope not, that Interactive Brokers are like that. But I will tell you this, is that Timberhill, which was owned by Interactive Brokers, let's do some digging here, which was a market-making firm, which is part of Interactive Brokers. And Interactive Brokers did own this company, Timberhill, for a while, which was part for their market-making division, but they lost quite a bit of money and got rid of it a few months ago. So here we have this news back in May where Interactive Brokers was sold off to, of all places, to Sigma, which is now the big HFT shop out of New York, that are now even bigger than Renaissance Technologies. So is there any connection back of this Timberhill back to Interactive Brokers? I don't know. But, it's things like this that we need to be aware of and make sure that we understand how things go about with the front running out there. And you may ask, what is front running? It's basically what I'm saying is practice of market makers of dealing or advanced information provided by their brokers and investment analysts before the clients are given information. So this is probably one of the big reasons why this firm got busted in India because of this. I'm not saying it is or it isn't, but it's very illegal. And as I said, there are some very big, well-known retail brokers that do this, but they don't make it public. I know of a couple. Don't ask me what they are because, as I said, I don't need to be having lawyers come after me. But be aware of it and do your own research on Google later. While we're on the topic, one other area that I forgot to mention was stop hunting, which happens to a lot of corrupt retail, specifically in Forex brokers, the ones, let's say, are hosted offshore in the Caribbean or in places like Cyprus or some weird place where regulators and there's no protection for your capital on your account. So a lot of these brokers can be involved with that, and basically it's a strategy that attempts to force market participants out of their positions by driving the price of an asset to a level where many individuals have chosen to stop their stop loss orders. So here on Investopedia, I'll put the links in my article here. But you should really understand this because a lot of brokers do this. So I'm very careful on the type of brokers I choose. I know one broker that doesn't do it is LMAX, well, at least at the time when they were founded, but I can't guarantee where they're at now. But that is, back in the day, a notable one that didn't do this. Okay, over and out later.